Okay, good evening, everybody. Hope everyone's okay. Hope everyone is good. I think we're just going to jump straight into it today, to be perfectly honest with you. And actually, I'm just going to throw this on whilst I'm kind of chatting to you. And the reality of it is, we've got a little bit of a change of the situation, but in the grand scheme of where we actually find ourselves since the beginning of February, nothing has really changed. We still find ourselves working our way through this channel, rising channel and falling market, bear flag, whatever it is that you want to call it. That is where we find ourselves. We have seen a rejection from the top part now of that channel, tying in with a couple of other indicators as well, which we'll run through throughout tonight's call, and try and give us an idea of where things are going. But you know, I suppose trying to find you know any excitement in terms of potentially what I see, still kind of majority out of the markets, vast majority of where I exited the market, price is still below. And my personal opinion, I think there is still a greater chance that we see Bitcoin's price continue to fall and fall below even the low that was formed at the beginning of February at 60,000, rather than actually this is marking the bottom and rising back up. I'm not saying there is a zero chance that this is the bottom. Far from it. I just think there is a greater chance that we still have further falling to come. So for me, it is a little bit of a patience game. And I suppose for a few weeks, I sort of managed that by doing a bit of trading. But now, obviously, with me just tinkering around with AI bots and that, I've kind of just put the trading to the back burner. Not because I don't want to do it, just if I can't put 100% time into it, then I know I'm going to make sloppy mistakes. So looking at where we find ourselves at the moment, evening there, Tim. Sorry, just seen your note. As we mentioned, we've been climbing up through this channel here, and we've had two attempts effectively of hitting this upper channel around about 79,500. We hit it at the back end of last week, and then again we hit it yesterday, early hours of yesterday morning when the markets opened. We moved up, traditional markets rather than crypto. We moved back up. But actually what we can see is not only has it been a rejection from that upper band level, we've also fallen below, closed below, and continuing to move away from is this level at 78,400, which represented the previous top only a couple of weeks ago, but it had some history and relevance all the way through back to April of last year, and that falling there, which is why we mark it on the 3-day chart. So, just trying to work our way up and maintain where things are going, not quite managing to do that. And I think we'll have a look at whether this is the pullback or the start of something further. But even looking at just sort of the sustained move we've had over the past 3.5 weeks from 65,000, it's pretty mean non-stop steady climbing all the way up to 79,000. At some stage we were going to have a significant retest, and on Friday we talked about the fact that we have been hugging the 10 EMA on the daily time frame. That has broken now. I'll have a look at that a little bit later on. But it isn't surprised to see that we could fall. And actually, we could fall all the way down to, we could actually fall lower than 72, but we could fall all the way down to 72,000 and then bounce from there. And this still continued to be a successful uptrend. So not all hope is necessarily lost, but just looking at the pure visualization of what this chart is saying, it's not surprising, given that we have now hit this upper band, that we are seeing that retrace. And again, generally when we do hit this upper band, we normally see a full retrace back to the lower band, and that's when it's going to be exciting. Are we now seeing the formation and the break of a potential bear flag? But as I said, that could go all the way down to 71,000, still being an uptick just about, and would have to make those decisions in and around when we get to that. We'll have a look at that in a little bit more detail later on. There's not too much really to say now about Bitcoin dominance. We did get all the way up to, I say all the way, 60.75%. We've seen that retrace slightly now. This is going more into USDT as that dominance is increasing rather than it being reflected in altcoins. And that's something we're going to touch on a little bit later on, but not too much more to say about that there. Total 2, very similar to Bitcoin in terms of it's now falling away. The difference is, as I mentioned last week, Friday and Tuesday, is Total 2 hasn't really had the uptick over the last few weeks that Bitcoin has. And we're actually seeing that it is falling back to representative lower levels already, moving back into the noise that we had at the early part of this month. And as we say with Bitcoin, we haven't quite got to that stage. We just started to dip our toe into it. And now I've lost where that chart was. Total 2, where are you? There you go. But that it just echoes something that I've kind of said for a long time with just where altcoins really are. And this chart, although it could be difficult to interpret, I think summarizes that quite nicely in that, yes, Bitcoin moves up, altcoins are moving with it. It's not moving as well, nor as successfully. I think that's mirrored pretty much the last 4 years, except for the odd outlier. And speaking of outliers, and I mentioned this in a post yesterday on Discord, is BitTensor, because it's not had a huge move today, don't get me wrong, but we are seeing a 4-5% move on the day, $10 up. And as I mentioned yesterday, for some random reason recently, whatever Bitcoin's done, BitTensor seems to generally be doing the opposite. Now, that's not worked in our favor through the month of April because Bitcoin has rallied and BitTensor, met its local high of 380 back end of March, and all we've seen is a steady decline. But maybe, just maybe, for those of us holding BitTensor, we might see potential uptick as Bitcoin continues to drop. BitTensor coming through. Now, it's not a huge move. It's not really left the range that it's been operating in for the month of April, which has been quite flat, certainly for the last 2 weeks. We want to be getting above 267 before we can say we've actually broken out of that range. But still, on a day when most other altcoins and crypto are red, it is nice to see a relatively positive move from BitTensor, and we'll explore that a little bit later on. There's not too much really to say, if I'm being honest, about this chart here. Bitcoin 12-hour time frame, you can even see on the 12-hour how it has marked quite nicely going up on the 20 EMA, which is the orange line there. It did manage to dip into this liquidation, long liquidation zone, short liquidation zone, apologies there. And it's effectively now closed it down to 79,500, which I wanted to just do whilst we were all looking at it together. But we've seen a bit of that rejection now. Rejecting kind of looks a bit like a double top M formation. We've got to see how far this falls. But if this is a W with a rise into the third rise and an M, maybe we do have some more to go. I'd personally want to see the drop one form, bit of a consolidation period before we can really start counting those properly. Because as I mentioned, this actually could just pull back to, even on this chart, 74,000 down to this fib level, still be above this low here and continue in the uptrend. So nothing to massively panic about at the moment. But going back onto those first charts I showed you, it kind of seems like we've at least, there's no denying that we've not rejected off that 79,500 level. It's how far we fall before we pick ourselves up. And here gives us a couple of indications of where we may go. We've got the 50 EMA on the 12-hour time frame at 75,000, but I'm actually looking at that one on the fib chart, 73,998, 74,000 for cash, which, as we know, because I must have mentioned it every week, was the all-time high from the March of 2024 after the ETF's launch. So it was a very significant level. It's played out very well for us throughout. That's certainly a level we'll be looking at. And then this level of liquidation between 72,400 and 73,400, it's actually only recently formed. It's pretty big build up there. I think some people have got quite happy about going long. So this is starting to build back up, which, given how close it is to that fib level, maybe if we can get down there, we see a little wick, take that out, and off it goes. We used to have a block here. But that's actually gone from the liquidation heat map that I was looking at. So I don't know if a lot of those orders have been removed. I wasn't really following it, to be honest, but it has disappeared, which is interesting because it leaves, don't get me wrong, there are liquidation zones all the way through here. All that I highlighted the significant areas. And what I'm saying is there isn't really a significant area between 73,000 and, the mid 60,000. So interesting to see what would ultimately happen should we get down and retest these sort of mid 70,000 ranges, and whether or not there's any appetite afterwards to move that down. But ultimately, you can't see it on this chart. But there's, if we were following this bear flag, that would be the line, the bottom. And so we'd be looking around about 71,000, a break of that line back into the 60,000s. And suddenly we're having that conversation of actually, you know what? this may have broken, and we're now down into this zone. So something to consider, but we digress there. Just to have a look at as we're going through. Now, in terms of progress, it's been rather stunted throughout the month of April, despite, plus 10% worth of gains. However, actually, over the last couple of days, we have seen the fear and greed index finally get out of extreme fear. We even got as high as neutral yesterday at 47, although that pulled back this morning. And I have a feeling, unless we see a large move from Bitcoin today to recover the losses it's already experienced, this fear and greed index is going to fall a little bit further. So it's currently sitting at 33, which is a relative high for the year, if we're being perfectly honest. If we just do the last 12 months on this chart here, I'll just bring this up. You can kind of see the last time we were above this level was beginning of January. We got up there, but even where we find ourselves now at 33, except for those two there, we're actually talking about November time. So, the best part of the last 6 months have been spent sub 30. And so we are in a relative choice of words there, greedy environment, because we're so used to being in the 30 zone. Now, let's just get rid of that. If I do put it on this max chart, interestingly, and we're going to start doing comparisons, we always do. We can't, the fear and greed only goes back to February of 2018, so we can only really take in the last bull and bear cycle as any kind of indication. But what you can kind of see from the last cycle, and I think it is playing out, and anything can be charted. We just got to take some charts with a pinch of salt. But we had, this top on the fear and greed index, interestingly, around about that Easter high of 64,000 in 2021. We know price went higher in November to 69,000, but we started to see the fear and greed index. The greed just couldn't quite get there, and into the bear market we fell away. And there's an argument, it's not going to be very well drawn, and I can't, but there's some sort of like line of resistance in the fear and greed. Well, actually, it's a very similar thing that has played out through this bear market, bull market and bear market, I suppose. So we have an initial top round about end of 2024. That enthusiasm when we got to that 108,000 level after the Donald Trump election win, that move all the way through November from 68,000 to into the six-figure range. And then we had a year later, I'm just trying to find it. It's going to be about here, I think. The actual all-time high, 126,000. And then we start to see it fall away, and we can kind of see these spikes ultimately coming back through. But again, you could draw a line very much from that. And I suppose the point that we're trying to make is not only in bear markets do we see, these relief rallies ultimately fail, but the greed or the euphoria that is associated with them are often very short-lived. And so far, that's not necessarily changed in what we're looking at. It could be completely pie in the sky because we only have the data set from 2022. You can see a little bit of the bear market in 2018. You could plot these and you'd know that we're 14,000, 12,000, 6,000, 6,000, 6,000. So there's definitely some similarities, but without having the top on it as well, it is difficult to draw that direct comparison. But there's certainly something similar to be had there. And then we get, this will be the last call of this month. And we can kind of see that actually, March is pretty static. It was just under 2%. But April, despite the pullback from, sub 80 or just about 80,000, we're still up 11% on the month. And it actually has been a relatively good month for us. Certainly in the last 6 months, it has been a refreshing break from just solid downward momentum, albeit static, through the month of March. And if you have a look at Bitcoin on the monthly time frame, you can get a real feel for actually it kind of stands to reason we've had such a sustained period of falling that we would expect from a monthly candle point of view to at least have some element of relief. But for me, this isn't screaming a bottom, and we're going to have a look at that on lower time frames as well. But just just in this image here, this still doesn't look particularly too healthy for me. And if we're being perfectly honest, we'd have to wait a long time for us to be confirmed otherwise. I'd have to see it above, let's just say 90,000, just to make it easy on the monthly time frame to really convince me that this isn't there. If anything, what we're actually seeing is a sustained fallback down over a 5-month period and kind of catching our breath around where we had quite a sustained element of sort of price action back end, or sorry, that's the beginning of 2024. And that, to me, that kind of makes sense. The real question is now, how come we haven't been able to burst through? Okay, it's only really been 1 month of green candles, and maybe we'll see more than that. But actually, when you look at other bear markets, you get that impression, don't you, that it is generally month on month of down red candles, potted with the occasional smattering of green. And that's what we're seeing there. It's what we saw, let me just get it right, 2020, 2018. Again, lots of red with the occasional green candle there. And this is it. And this is where, me at least, I don't get too excited. I try not to get too excited when we're going up, generally in a bull market either. But in a bear market, I try not to lose the big picture too early, just because we've had 30 days of positive movement. Actually, far from it. I kind of look at it as a case of, this is probably just a little bit of a relief rally. And we take a look at the fear and greed index, not the fear and greed index, sorry, the psychology of a trader kind of chart that we've overlaid on Bitcoin's price chart here. I think this is probably a fair, I have moved this today, but I think this is probably a fair indication of where we are. Price has formed a local low. We have then had a very positive sustained period upwards. And there are people that are giving bear marketers a hard time. People are thinking that we have found that bottom and this is the move back up. But ultimately, history of human psychology would tell us that we're probably walking ourselves into a little bit of a trap if we get too carried away by this, and we're actually heading towards the denial kind of phase. And ultimately, this will run out of steam, as it so often does in a bear market, and sentiment continues to the downside, and we see that move back down. And as I go back to sort of this chart here, if I mentioned at the beginning, it's not a non-zero probability that we can't go up from here. But for me, if we are to go back up from here, what I would expect us to do is to retest somewhere around this level again, that sort of 60k kind of level, as we do in most bottoms. We don't just hit it once and go up. We actually hit it a couple of times before moving back on. Similarly, there's a lot of lines on this, but you get the point there of having those sort of double takes, and that's to trap people both ways. The market does that very cleverly in terms of brings everything down again for that second time. Everyone thinks that that's it, we're going to be going lower again, and then the market does reverse, but we have that second opportunity to do it. So without that at least second touch of 60k ish, I still think that that's further falling to go. Now, what is quite interesting is our canary, because actually for the last 3 weeks, all BlackRock has done has bought. They didn't buy anything yesterday, but that's the only day they haven't. We have what looks like an incredibly bullish webpage. BlackRock have just continued to buy every single day for the last 3 weeks, and my maths isn't great, so let's just try and work it out. It's going to be about 400 and 600, 650. Probably about $1.5 to $1.75 billion worth of Bitcoin purchases in the last 3 weeks, which is a positive sign that there is some interest within that. Now, it's institutional investment where they don't really have sentiment. So, just the fact of most of the markets having rallied quite hard, people may think that this is an ideal opportunity to buy some, what they perceive, undervalued Bitcoin, whilst it has been more sluggish than the rest of the markets to move. And maybe that's where it is. We don't really look at the other ones. We don't normally look at them, so I'm going to ignore the reds there. I suppose the only two footnotes to that would really be the 2 red days overall, where we've seen significant selling from Fidelity, who are probably the only real other player in town. Um, they have caused the overall net inflows or outflows on those 2 days to take over. But other than that, generally, that I think that's a short-term positive sign. So let's have a look at this. We'll try and break it down through some lower time frames, but we will start on the weekly time frame. And for me, the glaring thing that's certainly standing out to me is Bitcoin's price turning around right on the 2021 EMA. If that's what you use, they're pretty much both on top of each other. But for me, the 20 EMA, exactly what happened right at the end of January, when we saw the price tumble from 98,000 down to 60,000. We had that rally up, and trust me, I mean, most of you were here then, but people were pretty euphoric when we were moving up through the 90,000s, having tested a low of 80,000. So definitely an element of caution there. Now, it doesn't mean that we can't turn around, and maybe we do go all the way up and retest that 50 EMA weekly time frame. That's the massive indicator we use to just litmus test whether we're bull or bear market. As long as we're below that right now, we are in a bear market, and that's sitting at around about 85,000. Now, it actually, I say wouldn't surprise me. I probably would be surprised. I wouldn't be shocked if we went there, because that 85,000, it also ties in just with the meat of this range that we found ourselves in through November and December of 2025. But I think there is something quite telling about this turnaround here. And I think if nothing else, oops, can't draw a straight line, so we'll just do this instead. So if a retest down to this level, 72,000, would make more sense. Now, that I can get behind in terms of a double bottom breakthrough, Kobo off some resistance and support, and then that move back up, and maybe that move to the 85,000 50 EMA level we talk about. I can kind of get on board with that. But failing looking at that and just trying to see how patterns have played out previous cycles as well as this cycle, I think there's certainly a red flag, maybe not alarm bells, but a red flag, orange if you don't want to be too dramatic, to say, well, let's just hold on a second, because despite that positive movement over the last 4 weeks, we have now run into it, and our first major sign of resistance, we've turned it about. Now, I say the first sign, we actually spent 2 prior weeks hitting into this, but we never broke above it. And actually now what we're finding ourselves is we have turned around quite cleanly from that one. So still 5 days to go in the candle. Anything can happen, but I haven't even mentioned those 4 letters that I know you're all waiting for. It is FOMC tomorrow. Now, it's fairly, I didn't get the website up, but I think it's fairly widely expected that it's going to be the rate remaining the same at 3.75. I don't think that is changing. I'm just waiting. I can't imagine it will drop at all. I think, yeah, it's 100% confidence that that's where it's going to go. I certainly would say there was not going to be much chance it was dropping, maybe a slight chance that it might go up. But interesting nonetheless to just see what the narrative is in and around that. Are they going to be dovish? Are they going to be hawkish? I don't know if this is going to be Jerome Powell's last one. I can't quite work out the time frame for when Kevin Walsh is going to be introduced as the new Fed chair, but we'll worry about that another time, I think. But yeah, that is certainly something that just concerns me, that we haven't been able to get above that. Next logical place then is a retest at that 72,000 level, and then we can have a conversation about what it does in and around there. Interestingly, this is months ago, someone asked me, I can't remember who, to talk about the bull market support band, bull and bear market support band, which I know is something that Ben Cohen does. And I have it on this chart. I never show it, but I must have saved this chart when I was doing it. So I just flicked it on today. I have to hide the others. But again, it's actually looking a very similar kind of picture, where it's come into that bull and bear market support band and rejected. That makes sense, by the way, because it's based off the 20 EMA and the 21 SMA. Might be the other way around. but certainly very similar levels. But for those of you that, I mean, there's no major difference here into what we were ultimately talking about. If we're in a bull market, we expect price to be above the support band. If we're in a bear market, we expect it to be below, and we can see these counter trend rallies, if you will, into the support band. But ultimately, in a bear market, we see the rejections from it. That happens very much back in 2022, where we see these moves up into it but reject from it, and again in 2018, and then again in 2014. But to be honest with you, it's exactly the same conversation we have about this red line that we use, the 20 EMA, with these rallies into it, into 2014, 2018, 2022, and then what we're seeing so far in 2026. So again, evidence building that we should expect these moves, these counter trend rallies into those. But the fact that we have rejected from it, and it is a rejection, although albeit it could turn around this week, it feels to me like this is now just a potential play for that continuation back down, or at least a retest of that 60k before confirming the bottom. Although for me, the timings don't necessarily work. And again, we've not even talked about the fact that we're moving into May. Sell in May, go away. It's always been a very good stable of the markets, although the last couple of years that's not necessarily been the case, but that's generally the narrative that people follow for. So that's something to at least be aware of as we go into next month. And then we have a look at USD. So I was going to build this USD, USDC, and DAI, and a few of the other ones. I probably should have done, but ultimately we'll just leave it with USD being the primary stable coin out there. And remember, when we're looking at stablecoin dominance in bear markets, the price, if you will, the dominance is going up, and in bull markets, it's coming back down. So a little bit opposite for those you are just every so often just glancing at your screen or your phone or whatever. But that's really what we're trying to see. But what is interesting is not only is Bitcoin running into the 20 EMA and rejecting from it, it just so happens to be at exactly the same time the Bitcoin dominance has come crashing back for a Kobo potential retest of the 20 EMA and has started to make that move back up there. Now remember, this doesn't have to happen that way. Just because Bitcoin's validating doesn't mean that Bitcoin dominance is sort of declining in a similar amount, because otherwise this would just be the absolute inverse of Bitcoin's pattern. And this is the bull market here, and this had USDT's lowest ebb in December of 2024. Nothing like that when we got to Bitcoin's all-time high, when it was more about 0.5% higher at just over 4.2. So don't think that they should mirror each other, but the fact that actually what we are looking at is Bitcoin has sort of broken out of this range. It has managed to sort of climb, not Bitcoin, USDT has managed to climb up. And then we had similar in January, where we then sort of retraced back to this 20 EMA before that sharp move up when Bitcoin went to 60k. Now we're starting to see that retrace, and we just so happened to hit this level here again, right at the time when Bitcoin's struggling to get through. It is interesting that lines out, and it is maybe a prelude for what we're going to see. And as we say, very similar sort of thing happens. And yes, obviously it's going to be similar to Bitcoin's price action, or inverse, should I say. But through 2022, moves up, comes back down, moves up, comes back down, builds from those, finds that bottom, and we start to see it all roll over. So it happens time and time again in bear market. So I was trying to find it here. That is the bear market 2018. Move up, come back down, retest, and then away we go. So definitely some opportunities there. I will just say in the early days, perhaps it's a little skew because USDT really came on, blew onto the scene, sort of 2017 kind of area, and it just printed. So it's sort of percentage, not its market cap, its percentage dominance within the overall crypto market space was probably a little bit skewed but it still worked out quite nicely in terms of just respecting the 20 EMA in terms of its position and its move relative to bear market moves. And then, as if not to, compound things, I was meant to talk about this one a bit earlier, but I was looking on Twitter today, and I think this was it. This sort of summed it up. We really waited 4 years for this. It's just flicking through, but yes, the prices of some of them, but just look at the charts over the last sort of 4 years. None of them have really seen that bull market move up that we were expecting from an alt season, and I was caught out by that too. That's not me necessarily trying to hide from that. I like to think that I pivoted relatively early out of alt, but ultimately altcoins have really struggled. And the reason I mention that is total 3. Now, on Friday, we had a look at some of these more basic charts, just having a look sort of fib levels and major levels of price area. And one of them I didn't cover was total 3, but this is how it was drawn. I thought it'd be a good place to start as we have a look at a couple of these, and you can kind of see taking it from the high of total 3 down to the recent low of total 3 back in February, and we've moved up, but we've really struggled to get through this first fib level of 236. There have been a couple of times that we've made it through. We've never stuck the landing for more than a day though, and we've come back down, and we've actually seen, although we have been hitting this level repeatedly over the last 2 weeks, we are now starting to move away from that. And it's not just the fib level. We actually have a look at the price action history, if you will, of just the overall market cap. This sort of $750 billion level, it has some real history to it in terms of where price can go and what it's done over its previous times. This is going back to 2024 and that kind of peak that we talked about when ETFs launched and where it's at. So there's a real level of resistance, I suppose, not just from a price action point of view, but ultimately from a fib point of view. Although what I will say from an EMA point of view, we are above these, and we're just building a little bit of support on that 50 EMA on the daily time frame. Whether or not it can hold on to that, we'll have to wait and see. I'm going to hide those because it's a bit confusing. We move on to the one from Bitcoin, and again, this is not based. This isn't price action. This isn't this rising channel. This isn't on EMAs. But just have a look. That 79,500 level is the 382, and we had one go at it, rejected. We've come back up nicely. Well, it depends if you find it nice or not. Cleanly rejected again off that, and the argument would probably be, yes, we can turn around. Of course we can. We're in fibs, but typically these fibs have actually played out quite well for us through the history that's been drawn. And so the argument is that if this is that rejection, the more logical place that we're going to find price action head towards, it's going to be that 71,500 level. That's something to watch out for then, because that 71,000 is the level we were talking about if this was drawn up here and what that would mean. So there's definitely an area of confluence to see how that would play out. And even if we did get through this level, we've got this price action area that we talked about, sort of 84 to 86,000. It's now tying in with where the 50 EMA is sitting as well. So some significant areas for us to ultimately get through. And I might be stretching the barrel a little bit here because it's not that many points, but this whole move over the month of April, we have now today broken through that trend line. And maybe that should have been saved for another chart, but I just happened to notice it and hadn't drawn it up. So certainly an argument to be had that's there. I'd like to give it another day or two to really just sort of understand if that's the picture that we're looking at, because I'm sure there'll be people that could line this up in a couple of other ways. So we'll just wait for that. I think from that we will move on to these charts and then go from there after I've had a quick drink. Bitcoin, to be honest with you, is a little bit the same of what I've actually already talked about. Granted, it was either the 3-day or the weekly time frame, but the patterns are still playing out very similar. These bear flags, if you will, the angle at which we've seen price move, very similar. Granted, this one has been longer, It's probably about 3-4 weeks longer than what we saw back end of last year into January, but very similar in terms of how it's played out. You know, bouncing between these levels, finally getting through the 50 EMA, taking a couple attempts to do it, getting above that cloud with then clean rejection off there, moving back down. Well, we got out of the cloud, we're still moving through. We've had this rejection now, and we have had 3 actual attempts at this. So, you'd like to think the more we strike a level of resistance or any kind of support level, the weaker it gets. But actually, we've had 3 very strong hits of this level in the past 2 weeks, and yet we still haven't made it. And we finally made that move down. And I talked about the 10 EMA just holding us up this whole move, and it really has been. Well, we lost that today. We've come back down to the 20 EMA. So as I say, there's not necessarily a reason to suddenly lose hope, because we would expect at stages the 20 to catch us if the 10's gone through. And I'd even argue that the 50 EMA could well catch us, as we've seen those retests back to the 50 EMA before. So now that we're on the daily, we're actually building a couple of extra levels in to have a look at on the way down, 75.5 and 73,500 areas that we want to consider. We start losing those. Obviously, the attraction drawn down with fib levels that we've talked about, with the base support of this range that we've talked about. We've also got the vector candles that need to be reclaimed. And this one is still shaded green, but actually it's this area here that we're really interested in. And then from the other candle underlining, it would be down there. So really looking at sort of 71,000 and below from that there to consider. One thing that we haven't really spoken about yet is the RSI. So there was a bearish divergence. We discussed that last week. That looks like it's starting to play out right now. But interestingly enough, actually, the RSI is coming into an area of previous support, as I've drawn with this trend line here. So hold our horses. Maybe we have got a reason for this to turn around. Maybe that'll tie in with the 20 EMA there, but it's certainly something to have a look at. It's come back down to this level before, and it's actually been able to bounce quite well. And don't forget, the RSI has no real correlation with what the price can be. So just because this previously hit this trend line when Bitcoin was at sort of 67,000 doesn't mean it can't re-hit it now at 76,000. So something to consider there. Let's try and move this back down. Where is it? And I suppose that the question is, we've had a look at moves to the top side and sort of 86,000, 84,000, whatever. How about down to the bottom side? Let's just roll this out and suggest that over the next couple of days, we do end up coming down to this level. The point then being, where can we find where price is going to go? As I said, at a minimum, minimum, I would expect at least one more retest of that low in and around 60,000. It doesn't have to hit that exact level. That would certainly be somewhere to have a look at it. I suppose if we are looking at, worst case scenario explosions, whatever you want to call them, I know that's how I titled it. Certainly that to consider. I'll draw it how I'd normally draw it, but I don't really know how it's going to break, so I'll take it from the top. And we're kind of looking at sort of $48,000 kind of level. We've discussed potential for how that could be relevant on other charts, which I'll try and find a clean chart to do this one on. Let's just get rid of the drawings. And we did a whole talk about where this can go, but if you have a look at just drawing a fib from here to here, I don't know whether or not you would argue that when we did get down to 59,800, based on how long a period this is, that kind of covers that 57,000. It's within a couple of percent. And so then, the argument that I'd really be looking at is somewhere in the mid 40s, so 47,000, 45,000. Maybe it gets down as low as 35. Be a gift if it did, I'm sure. Painful for us, for those that are holding still on to some, but potentially a gift for us to get down to those levels there. But that's kind of where I could see it going and not be too surprised by that. I don't think I'm going to wait for this level to get in. I think that would be foolish given some of the exits that we had up here, to wait and be greedy down here. I think realistically, however this next drop falls, I think I'm going to start edging back in and just take that as a bit of a win, assuming that next fall does come through. But if I see it bounce from 60, I'll get in and I'll just have to reevaluate. But I suppose it'll be a base also on time. I will be very clear about when I get back in. I think that's the point I want to make. But yeah, let's just get rid of those. We'll just have a look quickly on the 4-hour, see if there's anything else there. I don't think there really is. I mean, the whole theory I'm just working with at the moment, we're still within this range. Prices moving down. We've rejected off that, and I think the 4-hour is going to tell exactly the same picture if we're perfectly honest. Bear in mind I freehanded those. They're looking pretty straight, to be fair. I mean, here we go. Not only have we lost the 50 EMA, we lost the 50 EMA cloud. And that is something we haven't really done since we were back down at 67,000. And so really our next support is at 74. And we get down to that and we're going to be asking questions about, well, where we are. RSI still got plenty of room on the 4-hour for us to be able to move back down. But then again, maybe we should be saying that actually, could we see a move back up to 74 for a bit of a retest before seeing that continuation on the move back down? Given what tomorrow is with FOMC, and we always expect that volatility, I think maybe we could see a bit of whipsaw action in and around that there. But I don't think there's anything there that's really drawing my eye away from it. And until we get plus 80,000, I suppose, I'm just going to keep on working on this line here. And we'll see how it goes. Go back onto the daily and move on to BitTensor. And yes, we've started to see that move, but actually now we're starting to get rid of an understanding. So maybe why we're starting to turn around. And just look at how many days we stayed in that 240 to 250 kind of range. We finally get through it. We made probably the best move we've made over the last 2 weeks, but we've run headlong into the 50 EMA. What's interesting for BitTensor, it doesn't happen for this one, but just have a look at 1, 2, 3, 4, 5, 6, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 days where it's been standard volume. There's not really been much going on in terms of, abnormal buying and selling within BitTensor, which is obviously what we would want to see. I mean, I'd love to see us breaking through that 50 EMA with a green vector candle, particularly as it's not that far away from the 200 EMA at 270. So we've got a lot of work for us to do there, but we've done our dues down in these lows. We're starting to build ourselves and our way back up. But as I said in that post, from a daily point of view, 260, then 270, then 300, and then 380. There's so much in our way for us to really get elated. I feel like personally that is too much, and that really goes back to what we're seeing with just total 3 in general, and the apathy there really is, or the appetite there really is for altcoins right now. I mean, there's barely an appetite for Bitcoin. Matter of fact, I read today it is the Bitcoin conference going on at the moment in Las Vegas. I'm getting mixed reports, but from what I understand, numbers are down quite significantly from previous years, which you would expect in a bear market. But it just goes to show that there isn't really that much driving us. I sort of used to always try and do a few news articles. I just found there's nothing really worth talking about at the moment. Yeah, every so often there's some manipulation of some meme coin, or there's some regulation that's potentially getting through which hasn't got through, so there's no point talking about it. Or there's some mysterious White House insider that is able to put bets on things. But otherwise there's nothing really grabbing anyone's attention, good or bad, in the crypto space at the moment. And I think that's generally reflective in a lot of the prices that just been rather static and stagnant. But as I mentioned at the beginning, at least we are seeing BitTensor moving up. We're starting to see, and slow and steady is fine as long as we can get through this 260 level. I'll be quite happy with slow and steady continuing sort of up. We have stayed above this white line. I honestly cannot remember why I drew that white line, but the fact of the matter is we've stayed above it. If we can stay above that and just keep on building from it, I'll be absolutely fine with where that's going. Down on the 4-hour time frame, again running into the 800 EMA rather cleanly on that 4-hour. But yeah, I mean, we've still got plenty of room on the RSI. So it's the first time I'm looking at it on the 4 hour time frame. Look how long we've spent in this range, that the cloud has actually condensed down here into this sort of, squeezing of a toothpaste almost, which led to an explosion, I suppose. Maybe not an explosion, it's wrong term, but a decent move up. And we can finally see when we go on the lower time frames, there is at least some above average volume, good and bad, resonating through. So, okay, fair enough. On the 1 hour, we probably hit the top, yeah. So on the 1 hour from the RSI, we've kind of got to the top. Maybe we will expect some sort of pullback from this. We couldn't sustain that move. There is stopping vector candle here, although price has continued to climb with limited volume, so it could just be a false move before we see this move back down and try and reclaim this vector. And if it does, I got a feeling we're going to go straight back into that 250 to 240 range. Unfortunately, this was just a fake out before we continue going sideways. Just in terms of some other ones, I'm not fussed. I know I skirt over these, and I really am not necessarily too bothered. That's the picture of ETH. If any of you are interested, daily time frame, we are still above the 50 EMA. There's plenty of room on the RSI, but we are moving down. Not too much volume driving it. Bitcoin needs to make its move, and if it does make a move above 80,000, then there's a call for for Ethereum going, maybe up to 2,600. But failing that, the range, the bottom of the range that we'd be looking at would be something along the lines of 2,000. So sort of, let's just call it 2,000 as a round number. But I wanted to just quickly have a look at the likes of the Nasdaq and the S&P, because I feel like we're living in a bit of a simulation almost, that this thing has absolutely moonshotted up, and I don't think people quite get just how strong a move this really is. I mean, it wasn't that long ago we were at 27,400. We're at 27 at the moment. Earlier on today when I looked at it, we were at 26,900. But it has been an incredibly strong move with all of this uncertainty in and around the Middle East. Inflation has got to be going up. I'm sure people are taking things out of that shopping basket left, right, and Chelsea to try and keep it coming down. But the reality of where the price of oil is, the implication that that's happening, inflation is going to go up. We've seen it already in the UK that it's going up, and so I'm cautious, I suppose, about this move is what I'm trying to say. Obviously, a lot of my pension pot is technology based pension related, so it's very tied to the Nasdaq, and so I'm monitoring it from that point of view. But I'm not calling it necessarily as a top or anything, or the start of a blow off top. But I am just curious as to how this has done so well when actually we haven't really got a resolution in the Middle East. We haven't seen the long term or the medium term implications of what is going on over there. And so I am questioning it, and I haven't brought the chart up, but please feel free to Google it. But the Chinese retail market at the moment has just, I mean, let's see if I can find it. It's lost. It's down at levels that it was 20 years ago. It has absolutely fallen away, and I kind of feel like that's gone under the radar quite significantly. We know Dubai, the Middle East, from a tourist point of view, has absolutely fallen off the radar as well. I can't find the chart on Twitter now, so I'm not going to bother trying to drag it up. I'll post it in the group. It'll pop up as soon as I've got off. And so there does seem to be a lot of implications, whereas this is just climbing. It's climbing very well, very strong up through it. But what I would say is, don't be afraid of a pullback, whether it's the S&P or the Nasdaq here. It has been a strong move, even a pullback to the 10 EMA 7,000, but getting us back down to sort of just sub 7,000, that kind of range, the top of where the all-time highs were, would certainly be something I'd be looking at. Sorry, Chris put, the chart is fixed Fridays at 1 p.m. now. No, they're normally in the morning, but now I've got back into my running. I've just been doing my long runs on Friday mornings, so it's just giving me personally a bit of time to get back. And the Wednesdays, I'm going to try and do the first Wednesday call tomorrow. It is an open mic call, though, remember, so it's not going to be me led. Hopefully, other people there, and we can talk about absolutely anything: subnets, AI, crypto, whatever you want to talk about that's on your mind. more than happy to spitball some stuff with everyone on that. So yeah, it's just something to kind of have a look at, particularly as gold after its strong run, it's cooling off. I'm not saying it's falling away because it's not, and the stellar rise that it had, but it's managed to put in lower high and lower low after lower high after lower low. So maybe the trend's reversing. Similar is silver, platinum's looking the same, palladium. A lot of people talking about how these were going to absolutely fly, and maybe they will. But back when the markets were moving, these were moving too, and now suddenly, actually, we're seeing, which is right. This is the right order of things. The risk on assets, except for Bitcoin, obviously, moving hard. So we'd expect, these flight to safety assets, such as gold and precious metals, to cool off a little bit. I'm just trying to find where the US dollar is. What's that? Dixie, there we go. 98. Okay, I mean, it's not really cooling off as such, but at least it's moving down compared to where it was a month or so ago. So yeah, you would expect that. But no, I suppose I'm a little confused by it all. Maybe that's just because I'm not intelligent enough, or it is actually quite confusing, and that confusion should just be treated with a little bit of respect of something unexpected may actually happen. Anyway, I think I've kind of waffled on for long enough there. So what I will say is just be a bit cautious with where Bitcoin's price is at the moment. I completely accept that we could still move back up from here, but to do that, we need to get above 80,000. So just bear that one in mind. And there's nothing really, in my opinion, we get back up to 79,000. That is not the time to buy Bitcoin. That is not the time to go long. It's the time to sit and wait to see what happens. But likewise, there is at the moment a fairly clear indication that we're certainly rejecting from that level. And I would never tell anyone to trade on an FOMC day because of the volatility, but certainly just watch out for where that price could go, 74,000 and below. I think I've kind of given 74, 72, 70 as kind of levels, 71. So I know I'm kind of sitting on the fence a little bit there, but I think there's reasons behind each and every one of those levels, just depending on which time frame you want to work from. As I say, tomorrow we'll get that meeting. It'll be like a Google Meet type, 60-minute type thing. We'll get that out. We're going to trial in the evening because that's the one most people said they wanted to do. After that, it was Wednesday lunchtime or Wednesday afternoons that people were interested in. And then we'll see how that one goes. I'm assuming we're going to have that trading pub on Thursday at 1 o'clock. No charting call for me this Friday. I want a stag do. Wish me luck. I've not been on a stag do for a while. So that could be quite messy. And it's also the bank holiday weekend. But things back to normal next week in terms of Tuesday, Wednesday, Thursday, Friday. Wow, we're getting to 4 days. You'd think, given we're in a bear market, we've actually increased the amount of FaceTime stuff we're doing. But, it doesn't always have to be Bitcoin related. So, yeah, I think that's it. Enjoy your evening, the rest of your evening, everybody. Any questions, as always, feel free to message me, tag me, whatever it is you want to do. I am in Discord. I've just been a bit busy this last week with, unfortunately, real life stuff. But as I mentioned yesterday, hopefully most of that's been put to bed. So, yeah, have a good time, everyone, and I will speak to you all soon. Cheers now.